Okay, so all the word is out there about this 50-year mortgage that Trump talked about. And I think we in the business we understand what that means. Like, yeah, more payments means um smaller payment and now it's more affordable. But you do have to look at the long term, and I'm going to bring Rob in on this in just a moment. With For some of you guys that are newer, he's with our CMG financial partner. Monica has now joined him as the account representative and marketing person for them. So they're definitely there to help you out. And we'll talk a little bit more about what they can do for you on your business. But I just wanted to say real quick, I'm going to pull up, time will tell. We'll see if we even get to this. But I wanted to give you a little bit of information about mortgages in general. And this is what I'm basing these three or four slides on is that it's a $715,000 median house price in Northern Virginia. And this is last month. So this is anything from condos to mansions, okay?
Mhm.
The average down payment in Northern Virginia is about 15%. And this is overall. We may have different amounts on that for your people. So that puts the average loan amount at 607,750 and the average length of time in the home. I think this is important when people are talking about, I want the affordability, I want to be able to buy a house, I want to be able to get in, but I can't because of the mortgage rates and the price of housing. So we have to look at, well, and I in my opening graphic shows the young guy, old guy, and most likely that's not really what no one's going to probably get a loan at 50 years and stay there, and we know that. But I think we still want to talk about, well, what does that mean? So I did some numbers here again using my purchase price at 715 and the loan amount at 607, and I got the information on the right from the Bright MLS financial amortization calculators where I came from. So Rob, if I'm wrong, please let me know. And these interest rates, the 6.25 for the 50-year and 30-year, I am using Freddie Mac numbers. Now, most likely, if you go to 50-year, it's not going to be 6.25 if you're getting 6.25 on a 30, because you see the difference of the 15-year, which is the bottom rate. The shorter the loan period, usually the lower the interest rate. So if you go to 50 years, they're probably going to say, well, it's 50-year, but the interest rate is going to be higher. However, for demonstration purposes, I've left it here. And today I found some adjustable rates at 5%, which someone had in passing mentioned this. Maybe it was Rob, I don't know, but someone said, well, why don't you just look at adjustable rates? No one's even talking about that right now, but that definitely is a difference. So on that $607,000 loan amount, what we're seeing here is the principal and interest I have here. This does not include your taxes and insurance.
Yep.
So you toss your taxes in there, it's going to be a lot more, depending on what county you're in. So it's 3307 for the 50-year, and that's the big difference. It's $430 a month. So that's pretty substantial. That's about $5,000 a year that it would save someone and probably give somebody a little bit more buying power on the median price property to get into the market if they're not in the market. The adjustable rate, though, that's even lower. So you're still getting adjustable rate amortization at 30-year. And Rob, I'm going to toss it to you to explain and maybe this is something you want to talk about with your clients. Have you considered an adjustable rate? And what's going on out there right now, Rob, on adjustables?
All right. A lot going on. All right. So first off, let me talk to the 50 year. 50 year is not a done deal. We are so far from this. I posted something in the meeting room. You can click on that link. This was something that was thrown out by Pulte. And he said, "Hey, let's do a 50 year." And then Trump tweeted it out, and all of a sudden it's taken on legs of itself. So the 50 year, I highly doubt that it's going to come true. That's going to happen, but everybody's running with it right now and going crazy with it. Um, but to put things in perspective on the 50 year, if you have a 500,000, we'll use simple numbers. You have a $500,000 loan amount at a 6% rate. Right now, over 30 years, you're going to be paying $579,000 in interest. Okay, on a 500. So just about, you're borrowing for 500, you're going to pay just about 500, a little bit extra over that 30-year period. On a 50-year mortgage, you're going to be paying $1,079,000. So you're going to double it up for those extra 20 years. So that's a lot of interest to be paying on a $500 mortgage. To answer your question on the adjustable rates, yeah, adjustable rates are coming back into the market to a certain degree. As the Fed continues to cut the rate, as the 2-year and the 10-year continue to divulge, we are going to get better and better adjustable mortgages in VA and conventional and FHA. So that is starting to happen right now. But a lot of people, adjustable mortgages do have that negative connotation to them because of 2008. And so some people are hesitant to get into the adjustable mortgage. But yeah, I've done a couple of 5-year, 7-year ARMs, and with a thought process that rates are going to be going down in the future. And so they'll refinance into a 30-year fix down the road.
Yeah. I mean, any questions on that? Any comments? Anybody on the adjustable rate
I'd like to
qualifying or
ask,
anything? Go ahead, Anya.
it's not on adjustable, but recently with the adjustable rates, I heard that there might be something new. Again, it might be just, just like the 50-year mortgage, that there's talks about, I cannot recall the exact term of what they're calling it, like adjustable rate, but it's a rate that can be carried over. So if you purchase a home and let's say you pay down $400,000 on it, you can carry that balance over to the next purchase with the interest rate that you currently have. Did you hear about that, Rob?
Oh, I heard that somewhere. Yeah.
Yeah, I have not heard about that. Have not getting any information.
Okay.
Isn't it called a portable mortgage?
Maybe,
Yeah.
yes, something like
Yeah.
that. Yes, 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 yes.
Yeah, I
It's
heard about
actually pretty common in car sales, I believe. You bring in a car that you got a balance on, they'll give you a trade-in, but they'll let you roll that balance into your other one. But that's an interesting concept. And I see what everyone's trying to do is how can we get the payment down? You're going to be borrowing more money. And since you're borrowing more money, how do we keep the payments where it's affordable if your income's not rising up as quickly as it needs to be? So that's definite. Scott, we talked yesterday, and you had a point that you were making.
Yeah, so Anthony and I were chatting about this 50-year mortgage, and I was trying to think, is there a scenario for a buyer where it could make sense? In other words, they want to buy something, it's not really they want to find a way to save money for, say, 2 or 3 years. The intention is to maybe they're buying a condo and they want to save money for 2 or 3 years and buy a more substantial home. And does this option with a lower monthly payment give them a better means to save money for that, desired home? And then it occurred to me, it's like, well, wouldn't an adjustable rate mortgage offer the same if that was the one scenario where this could make sense? An ARM would seem to be able to do that. So I think as more information comes out about this, you hear how it was announced by FHFA. Nobody vetted this.
Yeah.
It was a political thing between.
It's not a real thing right now.
Yeah. Yeah.
It's a TikTok thing, Instagram thing right now. So yeah, he presented one thing to Trump, and then he posted it, and people are kind of like, "What in the world is going on?" So on the lending side, trust me, if there's a 50-year mortgage that comes out, phone calls are gonna be off the hook, like nonstop phone calls that you'll be getting.
Right.
But Scott, to your answer, so like on a $500,000 loan, the mortgage payment on a 30-year versus a 50-year is going to be $356 per month in savings.
Yeah.
But you're exactly right. If you're going to save something, you might as well just go into an interest-only loan, or you go into an ARM loan, if that's what you're going to try to do.
Well, I think And I think that's just educating agents who then educate the consumers. What are the options available? I've not even talked to any of my buyers about adjustable, but I'm thinking, well, I mean, I'll bring this back up on the screen. I'm like, well, that might be something to really talk about. If it's going to save them, let's just say from a 30 year to an adjustable, that's almost $500 a month. Definitely something that can help them out. Um, and now, they don't have the security of what the long term is going to be, but definitely that helps. And then I think you got to talk about points, but if you're competing, you may not have the opportunity for points. And I forget, Rob, what is it for points? If you pay a point, what does that bring the rate down?
Traditionally, it'll bring the rate down by maybe a quarter point. So one
Yeah.
point is 1% of the loan amount. So on a $500,000 loan, it's going to be $5,000, and it might bring your rate down by a quarter point. Sometimes it's better than that. Sometimes it's half a point.
Yeah.
But you have to look at what the savings are between buying those points, what your new mortgage is, and divide it into that $5,000 and see how many months it's going to take you to recoup those costs.
Mm-hmm.
See if it's going to make sense. In a world where we think that the rates are going to go down, I'll let borrowers can do whatever the heck they want, but I'll never actively say, hey, let's go buy points right now. Just because I do think there'll be refinancing in a couple of years or
Right.
1 year. And then at that point, I'll say, hey, you want to get your rate really low, let's go ahead and buy down your points, buy down the
Yep.
rate.
And for the ones that are coming in now, I just wanted to say I've got some stuff on some charts here, but I wanted to make sure you saw what I'm basing it on. And this is the median house price in Northern Virginia at 715. Do y'all see that infographic on the screen? Okay. The
Yes.
average down payment in Northern Virginia is about 15%. The average loan amount then is 607. And so with the average down payment at 15%, the average length of time on the home is 12 years. So we're not talking, when they say 50 years, they're not going to stay there 50 years on average. And with that said, I appreciate it. Again, this is the difference in the monthly payment of that $607,000 house. Now I want to get into when you're talking the Dave Ramsey mentality, if you want to get paid off and all that. I want to show you now this next graphic, which I think is the one you really want to share with people. Oh, okay. Well, let's look what 50 years would do with your interest. Now, what I'm showing here, I love charts, y'all. So this is showing in 10 years what you've paid in interest and principal on these different type of loans. So I popped in a 15-year loan. If the monthly payment's not an issue for some people, they want to look at a 15-year, they're going to pay a higher monthly rate. But in that 10th year, they have paid down $44,167 in print. They've got principal now that they've paid, and their interest is only $15,384. The adjustable rate at 5%. And again, this is for just discussion purposes. You'd have to get your own amortization chart to see what these would turn into. But if it stayed at 5% in 10 years, they will now have principal payments of 14,107 and interest payments of 25,042. Now we look at the 30-year, which is the king of the loan type amounts. And at 6, and I believe it was 6.25% interest, you see what they've paid in principal and what they've paid in interest, and then the 50-year loan in the same amount of time. So 50-year loan, the only benefit you're getting out of that is a lower payment to be in a house.
And
That's
also,
really the only thing you're getting is I can now buy this house. I can walk in the door. It's my house, but in 10 years, I've only paid down $3,200 in principal.
and that's
The
that's the
rest of
key.
it has definitely been in interest. Yeah.
That's the key too. There is, like you said. I mean, versus the adjustable, you're not building any equity.
Right. I was going to say the same
Right.
thing.
And
Your
so, I
An
mean,
equity is going to
adjustable?
be a lot less.
for
No,
versus
in the
versus the
50-year
50 year,
mortgage.
the 50 year, you're building no equity whatsoever. So
Right.
Right.
unless things
It's like renting almost.
appreciate massively, yeah. You mean even if you say, oh, I'm going to only be here for 2 or 3 years, 4 years, I'm gonna sell. Well, what are you going to sell? You're not gonna have. You might be underwater.
Then you're talking about the only equity you have is growth of the value of the asset.
Right. If it appreciates, but if we go into depression and
Right.
now you got to sell in 3 or 4 years or recession, and then yeah, you're shot.
Right.
Hey,
I
hey,
think
let me
that,
ask you something. Let me ask you something, Shane. What happens during every recession in the housing market?
yeah.
What happens? So if
Or
we
say,
go into a recession, a depression, what do home values go down or do they go up?
they go up.
They go up every single time. Why do they do
Yeah.
that? Because the Fed's going to cut rates, and so you're going
Yeah.
to get ultra cheap rates that go down.
Yeah.
If they do introduce this 50-year mortgage, what is it going to do to home prices?
Oh, yeah. Same thing.
Home prices
Right.
are going to go off. I mean, you're going to see double-digit appreciation
Yeah.
very quickly because
Mm.
people are going to be able to go buy more home. I mean, it's not going to change the habits of buyers anymore.
Right.
So they're not going to say, oh, I'm going to have my debt to income ratio. I'm going to leave it at 35. I'm going to go all the way up to debt to income ratio of 50 on the 50 year. And so now I could afford the $800,000 home. Now I'm going for the $1.2 million home. And so it changes everything. And so that pressure on the market is going to would create tremendous, it would make homes even less affordable,
Yeah.
in my opinion. So
Yeah.
this whole idea, in my opinion, it's very in the short term, maybe it could work to get people in the home. But in the long term, people are going to
Mhm.
hold less equity in a home. They're going to be paying more for that same house because of the 50-year. This has not been vetted or really thought out.
No.
And I'm not trying to be negative. I'm just like,
It's realistic.
it's the real problem, supply and demand. There's not enough supply and there's a ton of demand. The average first-time home buyer just raised up to 40 years old. Before COVID, it was 32. I mean, we got to build homes is what we have to do, in my opinion.
Right.
Build homes, and because once the rates cut, the home values will continue to go up.
Mhm.
Real quick on your chart, I ran a quick amortization on the
Yeah.
50-year. So after 10 years on a 50-year, 500,000, 6% interest rate, you have paid 294,000 in interest and only 21 towards the principal. On the 30-year versus 30-year, where you've paid 278 on interest and 81 on principal. So you're paying on the 30-year, you're paying 80,000 of equity versus only about 20,000 of equity. I mean, that's a huge difference.
I mean, who knows? I mean, this might come about, folks. I mean, we used to have the LIBOR, that used to be out there. It was where you picked your payment every month. Was that the right one I'm thinking about, Rob? The
Yeah.
LIBOR payment. You want
Yep.
interest only. You want and you picked which one you wanted to pay every month. And it's like, okay, that didn't last. It did last a while, but when the market turned, it didn't do so well. So what I'm just trying to show here on this stuff is like, what is this? What is this discussion that's going on? What I would submit to you is that it's an opportunity to start a discussion. And I'll send these charts out. I'm going to do a video on it myself, but I'll send the charts out, post them, and they'll be in JPEG format, so you can just pop them up there to start a discussion in your social media, to print them out and have something you can use to talk with people and say, even if you could, I appreciate the monthly payment, but you're getting into the house and you are paying the bank all this money more than anything else. The bank is going to love this. I just don't see it happening because there's other ways to work around it with the products we have. I mean, you saw the difference with the adjustable rate. Talk up adjustable rate with these charges. Say, look, instead of going in for 50 years and having no equity in 10, go in for a 30-year adjustable rate and have at least $15,000, $20,000 in equity. And that's assuming you haven't appreciated anything. Okay, that's the assumption there. But it most likely will appreciate in our marketplace. Any other comments, questions? Good deal. Hey guys, I want to put a shout out to Rob and Monica in their new partnership coming up. Monica's already making a difference in I think in that social media realm. I'm seeing a lot of posting there. She also will help you guys out with your business at all possible. Monica, you might want to talk a couple of who have you helped out so far in now that you're back here in this saddle, what kind of things have you done for some folks?
Hi, everyone. Well, so far, I attended and we've helped out a little bit Melinda Schnoor. So she had an amazing fall festival at her home in the backyard, and she organized a lot of different entertaining things for her clients. She had a petting zoo, she had a wine tasting station, she had some other things that were really entertaining, like Mission Barbecue. We were actually sponsoring that. So the food part, we were the ones sponsoring it. And it was so much fun. And we got a lot of positive feedback from that event. And yeah, now we're helping other people with their events. Steve McLevain, he's going to be doing he's Jingle and Mingle. That's for Christmas, so we're going to be helping there. And there's also a wrapping event, gift wrapping event with Tim Hong. I'm not sure if he's on right now. I'm looking for him, but I don't see. Laura and Sherry and Vernon are a part of it. And Gordon also joined us last time. So thank you for that. And yeah, if anybody has any like questions or need any help with anything, I'm here for you to support you. Or even if you need like an accountability partner or someone to just sit there with you and answer any of your questions. You're doing your cap items and you don't know how to print them, I'm here for you. Or you're wondering how to clean up your database, please call me. You have my phone number. And if not, let me know. I'll give you all my information.
Yeah, this is something I'm putting together. I saw what Steve McElvain was doing. I'm going to do a New Year's biz lunch. And so I'll be teaming up with CMG on, we don't have it nailed down what all we're going, but this is, I thought we got this great space. This is a picture of our coffee cafe, y'all. And so I'm putting this together as my postcard. They're going to help me out with that. But I think, we've really got a resource here that we need to be using in our business. One of the biggest things I think Monica can help you guys with, if you're having an event and you know that that's part of our practice when we reach out to our clients, have an event, let her do the photography so that you're not trying to get pictures of it to repost. Let her do the photography and the posting and all that stuff, and maybe going live so that that's off your platter. I mean, that's a big one, I think. So that's what I'm going to be wanting her to, because I'm into the social media. But anyway, so I'm looking forward to it. All right. Any other stuff besides 50-year mortgage? I thought that's the hot topic. By the way, I did a 30-second video on why I thought this was a farce on my Instagram. I usually get 300 to 500 views on my Instagram, sometimes 80, right? This thing's at 2,100 and counting. And 93% of the people don't follow me. So it's really got legs. It's a hot topic right now. And I think we need to be talking about this on your social, to talk about the 50-year mortgage. I think it's a hoax. You can say that or not say it. But here's how we can lower your payment using an ARM, if that's what you're looking for, because the consumer doesn't know about it. Remember, our buyers coming in are millennials and Gen Z, and the Xers are probably already in. But the millennials and the Gen Zs, they don't know this. Treat them as brand new buyers. They don't know this stuff. So we've got the data, we've got the information. Use that to start a discussion to get them off the couch and into your car to go buy a house. Okay. But anything else going on? You guys got questions on?
I would say over the next, let's say, week to 2 weeks, watch to see if the end of the government shutdown, either the actual event prompts more buyers to get into the market, or the psychological impact of, oh, okay, things have changed. So I don't know if that'll be the case, but we should, if it is going to be a positive, we should start seeing some impact here in the next 7 to 10 days, I would think.
Cool. I think you're right on that. I think I'm right on. And I mean, I've been tracking what's happening during the shutdown. Now I'm going to track. I think today they're going back. Is that right? Anybody know?
Mhm.
Yeah. Okay. So I'm going to start tracking today till December the 15th and see, okay, what happened afterwards. And right now in our area, the buyers have been buying at the same rate they did last year this time.
Right.
So I suspect there'll probably be the increase like Scott said.
Yeah, because the question is that it's an unknown, is
Mm-hmm.
with the confluence of rates going down by, let's say, roughly 0.5% since midsummer, and more inventory, a lot more inventory, and the seasonality issue all being pro buyer, how many people that would have heard about that, thought about that, would have gotten active in October, didn't because of the shutdown? That's the unknown.
Yeah, for sure. Any other comments, questions?
They actually went back to work yesterday.
Okay, got it. All right.
Yeah.
Yeah. Okay.
Museums open on Saturday. I got a lot of posted, saw a lot of things about that, Smithsonian and whatnot. They're going to open back
Yeah.
up Saturday.
Okay. Is that it? Anything else? All right. Good deal. I will